Uh,
Good morning, Doug. It's good to be back.
Good morning.
Man, it is what?
Is it good
70
to be back?
It is. It's 75 degrees outside. It's beautiful. I got to have dinner out on the front porch of Gimbal last night. I'm loving life, man.
You had dinner right there?
I had dinner right there.
What'd
Well, I set the pizza right here, but I ate it right out there.
Basmos?
Puccini's.
Okay.
I mean, Puccini's pretty good. Basbo's is good too. I forgot about them.
The reason I ask, is it good to be back, is because I had culture shock coming back into Carmel. Like there's traffic,
Oh, yeah.
there's a lot of material things where you can spend your money. Everything is beautiful here.
I was in Hilton Head though.
Okay, okay. I I was coming back from Kosciuszko County.
Okay. Yeah. I don't know. What can there be, like 40,000 people on all of Hilton Head? I don't know what it is, but it's like one big traffic jam.
And it's just beautiful, as I remember.
Yeah, I'm not complaining.
Like the McDonald's signs are beautiful.
Yeah. No, it's all nice. I'm just saying.
Yeah,
I drove through. I drove through Atlanta on my way back from Hilton Head. So like it just depends on where you were away at. Like when it was a decade ago about now, I was coming back from Alaska. It took me quite a while to get my brain back. Like that just rocked my brain so hard I can't even tell you.
Questions of what am I doing here? That's what was popping through my head. What am I doing with my life?
When I came back from Alaska, I'm like, where am I and what is going on?
You all out there on the internet, do you ever ask yourself that? What am I doing with my life?
I had somebody while I was on the road ask me, does my life matter?
That's a great question.
Yeah, and I was like, it does, but it's a good question to ask every day. It's a good question to ask. What am I doing today that matters, right? Like you can do something today that matters. And I keep in my backpack $2 bills for people that shake me down for money. And 2 weeks ago, I was walking to get some coffee in Washington, D.C. And Kevin stopped. I was on the way back. Kevin stopped me with his hat out. And I didn't have money in my pocket. I don't like in big cities pull cash out. So I said, hang on, man. I went and got some money out of my backpack and took it back to Kevin. And he started talking to me. He's just sitting on the curb and he's going to town. And we had a conversation. He told me he'd been in prison for like 25 years and he's not homeless. He has an apartment. And he just needed a little breakfast money. And so I didn't think anything about it. I go back to the hotel to get Casey. And so Casey and I are walking we were going to Washington Monument before I jumped on the Gimbal call. And Kevin was still there. And I go, hey, Kevin, meet Casey. He goes, Kevin, Keith, Casey. And she goes, and my husband's name's Kevin. We had this wonderful conversation. And as we're getting ready to walk away, he goes, hey, I took that money and they're bringing my breakfast out any minute. And this 20-year-old kid comes out with a sandwich and hands it to this guy who looks homeless.
That's awesome.
And
the DoorDash or what?
No, he's just sitting out by the restaurant that I've been in. So the kid's walking away. I go, hey, have you ever talked to that guy? Like he was in prison for like 25 years. He's probably worth having a conversation with. He probably knows stuff that's interesting, but like he seemed to be finding out that and sitting on that curb in Washington, D.C., his life mattered. It mattered to me.
Yeah, that's the deal. Life does matter. And I mean, we talked about purpose. Was that a month ago? I don't even know. One of our favorite topics, just talking about purpose, talking about mission. What are you about? And I think it's a great question to ask yourself is, what am I doing here? Why do I live here? What would I do differently? Would I do anything differently? And then here's the other one I ask myself all the time. Do I have any guts? Like let's say I know the answers to the mission or to the purpose. Do I have any guts to do it?
Yeah. I think that's part of the answer of like I think it takes
a lot of guts.
I asked a man who runs a soup kitchen in Murray, Kentucky. We were having coffee or breakfast a month ago, and I said, "Hey, man, when did the term homeless come to being?"
Okay, you talk about this.
And he's a very thoughtful guy, and he said, "I think before homeless, they were just called pioneers, Keith." And so, and
I mean, who would want to be a pioneer?
right. Well, I mean, to be homeless takes some guts, right? Like it takes a lot of guts. To be a pioneer takes guts. To raise 5 kids took a lot of guts. I think our
You're
bodies.
probably a pioneer right now, and you don't even know it.
I was going to say, I think our bodies and our souls need that pioneer
Mhm.
attitude about something. I'm not saying you have to move out of your house and onto the streets. I'm just saying, have some guts about something today. Go do something that makes you a little uncomfortable, whatever that might be. Yeah. I'm going to do that. I've been doing that, but I'm going to do it again.
I think you do a good job of that.
Yeah. I like stirring the pot in my soul. So, well, I had lunch with Brian Hour. I'd love to get him on the show sometime. You think we could do that?
Okay, so Brian is a friend of ours. Keith met Brian in 2005.
6.
Six.
Well, I met him before that, but I actually became friends in 06.
And so Keith took a sabbatical, and that sabbatical was it 3 months?
It was, yes.
And during that time, I was with Gimbal 2 or 3 years. I don't even know if we were called Gimbal at that time. And Keith said, "Hey, Doug, I'll give you 3 phone calls. I'm out of here for 3 months." So I only had 3 times to call Keith, and I was like, "Okay." But it was a really great time for you in your life. It was a great time for me to take some responsibility and go. And it was during that time that Keith, he would stop by Hardee's just to see what people talked about. Am I right?
Yeah, I just wanted to see like what is retirement? Like these guys sit there and they talk and
Yeah. And so he would see this dude reading financial things, and he struck up a friendship and conversation. And what a fantastic story. Brian is a hero at my with my family.
okay.
Just because of his own uniqueness and his capitalism adventures, his charitable adventures, and then his life on purpose today. I mean, he's an impressive dude.
He is there's national treasures. He's a local treasure that I think very few people know about. I've introduced a good number of people to him, and I don't know that they can appreciate it because he's got that adventuresome spirit. He's got a curious mind, and he's very thoughtful. But I wanted Caleb to meet him. I introduced another young man to him, and anybody that's interested in the market, I'm happy to introduce you because he loves market. But I think what he was explaining to Caleb that is a really thought-provoking idea is a challenge with being in any industry is that industry can go out of favor. And if you put your whole learning, your whole investment into that industry and it goes out of favor, say 50% of your working career, say you work 40 years and that industry goes out of favor for 20 years, what do? You might be unemployed. You might
be the only blacksmith in Indiana.
Well, okay, that's going out of town forever. Right? Like, yeah. So he was saying with the stock market, if an industry goes out of favor, you just take your money out of that industry that quickly, and you can move it into other industries. And there's always a industry that's moving in some direction, right? And so, like when we went through the Great Depression, it would have been construction industry because of all the federal projects building the parks and building the roads. So if you put money into that, you probably made a lot of money in the construction business over those years. And so that was the idea that struck me. And while I was in DC, the last time I was there, it was January of 2020, and I met a young guy who had just one of the most difficult stories I'd heard in a long time. And I reached out to him to see if I could have coffee to kind of see where his story was at this point. It was his personal side was doing a little better. His professional side, he was just on the struggle bus. And he was telling me the woes of commercial real estate in Washington, D.C. And what he was describing to me reminded me of a story that Brian Auer had told me about Indianapolis commercial real estate in the early 70s. And he was talking about like the Keystone at the Crossing was just, there was nothing going on there, even though that they had started the construction. And it'd be hard to imagine that if you're familiar with it today. But then as I was thinking about it, is my first job out of college was in Houston, and there was a thing in Houston called Texas see-throughs. I don't know if I talked to you about these before, but the high rises, they built all these high rises, and you could just see right through them because they didn't have any tenants. Texas was pretty heavily oil driven at that point, and it was in a depression. So the whole city of Houston was kind of depressed. I just happened to be in an industry that wasn't at that point in time. And so I just did a little research about commercial real estate, because this fella seemed to think that this commercial real estate challenge is going to go on for months and months and months, maybe years, due to the kind of change in the work style of people. And so as of July of 2024, the vacancy rate in commercial buildings today in the United States averages about 18.1%. San Francisco is one of the higher places at 27%, and Phoenix has 33.4% vacancy rate. There's a rate that's called available rate, that is total space available. It would be somebody had a bunch of space, and then they realize they don't need it and they're trying to sublease it. So that's probably a 25% increase. So if it was a 33% vacancy rate, it may be as high as 40% available space in those markets. So that's a lot of real estate that's sitting there. And
are those numbers high?
I think they are, yeah. I think they're as high as they've been in a while. And when you so it created other questions for me thinking about that, is like, just like I was saying, in the Depression, there were industries that came in favor and some that came out. So I started asking people last week or so, what's going on with commercial real estate in your city or your city? And there was a Humana headquarters in Louisville that they're having some problems. And one of the people I was talking to this week is that Humana's trying to give that maybe to the city of Louisville, just to get rid of, because the expenditures to keep it running are more than they want. And so
and they probably own it.
Right,
so
right.
I would think that a large majority of those vacancies are properties where there's money owed on the property. And tough to find liquidity and get out of the technology business and into the healthcare business or into the oil business like you can with the stock market.
Yeah, and so it's just real thought provoking, and just to see the creativity that'll happen is
that's the exciting part.
Yeah, so one person I was talking to said that New York City was turning some of the buildings into gyms, and I was like, how many gyms do they need in New York City, right? Like,
it might turn them into vertical farms.
Well, who knows what they do? Like the gyms where like one floor might be pickleball courts, another floor might be bicycle racing. And so they're able to do, but I mean, if you've got, what did I say, New York City was 15% vacancy, that's a lot of gyms. But the other thought was, how much of this, because we have a housing shortage, how much can be converted to housing? And our friend John, when I was talking to him this week, he said part of the challenge with converting these commercial buildings to housing is the weight structure for housing is heavier. It takes more weight to put a house in than it does for an office building, because you got showers, baths, things like that are heavier. Furniture is heavier and things like that. So there's a lot of things
building them in cities which have a lot of regulations. I mean, on the commercial side of the real estate, the big buildings.
Yeah, there's just a lot going on with it, but it'll be, I think, a theme that we'll probably talk about for months ahead, to see what's going on with those cities. But if you're involved in those things and it's really difficult, it's probably a good time to just step back and think, well, is it time to pivot into another industry? I'm not saying it is. I'm just saying that's the thing that Brian taught us, is that the beauty of life is you don't have to stay plugged in. And with the stock market, you can shift on a dime, and we can shift on a dime right now, Doug, and talk about what's going on in the market.
Yeah, I think, boy, it's just been such a a really great market to be a part of since the fall. And really year over year, things have looked pretty good. And when I say year over year, I mean, say, July this year to July last year. And so it's been a great market to be a part of, and I think it's been heavily influenced by interest rates. And there's been a lot of hype, there's been a lot of talk, a lot of discussion about interest rates, but we don't know the next move until the market tells us. And so until an interest rate move is presented, it's just speculation, wondering what's going to happen. What was it at the beginning of the year?
I think they were talking about 3 or 4, or
I think it's 5
yeah,
or 6
yeah,
rate cuts.
right. And we've had 0. So
We've had 0. And now there's some talk of maybe a quarter or a half. And then there's talk, well, if you go too much, that increases recession thoughts. And so we just won't know until the market tells us. So overall, it's been pretty good.
talk to me about this particular chart of the NASDAQ so we can give our thoughts about what is actually going on today.
Yeah, that's a really cool line that you just drew. You extended one that you had already created. Is that right?
Yes.
The black line that you turned into red.
Just kind of channel lines is what I would call these, the lines that were kind of dictating the highs and the lows of this run we had from October through March.
Yeah, it's amazing how those data points connect and form a channel. And so we've gone into some selling here recently, and the lines that we like to pay attention to, and we talk about all the time, are the red line, the 50-day that keeps pointing out, and then below that, the 200-day moving average. And those two lines historically have been very important. And it's basically just price. And so when price is going underneath the 50-day, that's putting pressure on the market. When it goes below the 200-day, there's even more increased pressure, just because there's people who bought above those lines. And what are they thinking? They're thinking, man, as soon as it gets back here, I'm selling. And so there's pressure that's put on stocks that could be approaching those.
And I think we had a conversation even before we both kind of clicked out of here on vacation, and I think it was right over in here somewhere where we were just talking about that the NASDAQ had got, we thought, kind of a bit ahead of things. It was almost 20% above this line right here, whereas over here it was maybe 10% above. And so these things, when they can kind of start getting towards the top of that channel line, a lot of times you might get ahead of yourself, which just means a bit of a correction or drop back into that channel.
And this stuff's normal. It's painful, but it's normal to go through periods like this. And so there is some staying power involved, but then there's being ready for the opposite side of the trade. So if this were to start to decrease and we move towards that 200-day moving average, that could be concerning.
Well, I'd say also that we made some strategic decisions over here to move some of this over into other areas of the market. And let's just,
well, that's the shift you're talking about with the stock market.
Yeah,
so
let's take a look at this thing right here. We've talked about this one for.
You want to compare? Can we compare those two? I don't know if we can.
I don't know if I can or not, Doug. Let's see if I have any skills.
I mean, I don't know the code. Oh, there it is.
There we go.
Nice.
I
Look at those
don't know how to
skills.
change that color there. Can you all see that color? That's
Blue.
Is that ocean foam
or something? I don't
Yeah.
know.
I feel much more feminine.
And then that's a year over year.
You want me to change
Can you
it to
change the
a
date
couple
to-
years?
No. Change it to well, I wasn't thinking that, but if you want,
Yeah,
to
I'll
go
change
for
it. There's a couple.
I was thinking here more
Yeah.
in the last few weeks.
Yeah, no, that's 3 years right there. If I go 4 years, they're pretty much the same. Isn't that funny?
That's awesome.
But if I go back to 2020,
And here's what we're looking at. We're looking at the NASDAQ, which is like the big company tech stocks. And then we're also looking at the smaller company stocks. and that's the black line. It's a very different type of companies represented.
And quite a divergence in the market over the last, it's not gonna let me draw on this. Oh, it is. So if you look at the divergence from here to here, just a month ago, not even a month ago.
Yeah.
I've heard people talk about the jaws are closing. And so the risk of being up here versus being here was smaller. And I think we dip our toes into the market for our clients in it.
We've dipped our toes in the small cap stocks so many times over the last 5 years. It's ridiculous, and we've been wrong. And it's just gone sideways.
That's what this is, the weekly chart of the small company index, and you can see going back all the way to, this is March of 2021. We're pretty much at the same level.
But just like Keith showed on the comparison chart, things are starting to look pretty good on the small side. I tend to think that's because rate cuts might be in the future, and for a smaller company who is borrowing money for future success, that just means lower potential outflows for them on the borrowing side.
Yes.
I mean, I don't know. This is what I tend to think.
So we can go all the way back to almost, I can't tell what that is, at 2018, that we're not that high above this peak of 2018. And if I were to draw a channel line over what it was doing for a decade, it was kind of at the slope that the NASDAQ has been at for a while. And the NASDAQ, I think, is lulled a lot of investors into believing this is the only thing I need to ever do. And it could be true. I don't know that it is, that my career hasn't proven that's true, but this sector is just starting to get my attention a little bit. What else?
Well, if you go back like to when I was first starting in the business, asset allocation was like what I heard from every mutual fund representative, or if we were listening to industry talk, asset allocation is a big deal, and they would say, hey, put a decent chunk, a decent percentage into S&P 500, S&P small cap, foreign stocks, and you just sprinkle these things out, and over time those small stocks would do the best. That's what they would tell you, but they've done nothing for a long time, and so it's better to just sit out there you go, and wait for the opportunity. And when will the opportunity happen? When the prices go above their old high.
And we don't know when that's going to happen. It looks like it's trying to do it right now.
They're trying.
Yeah, it's the little engine that could. I think I can. I can. But it's pretty exciting. I think it's really thought provoking. I'll share another screen with you all real quick here, because I know you've talked about this in past weeks, Doug. This is the VIX index, and I'm going to move it over to the week or daily. And we've been talking, we drew some channel lines over here earlier in the year, and we've been talking about how low this had got for a long time, and probably in several of our conversations in the last 100 days on Fridays, we've been talking about, we kind of suspect this is going to work its way back up, and it did with a vengeance in the last couple of weeks.
When it was low. Yeah, so when you see the squiggly lines moving up north, that just tells you that there's increased uneasiness in the marketplace. But we need that to create opportunities.
Right. When there's a jolt in volatility, it means that a stock or many have either gone up or gone down. This week, I think the prime players this week were Tesla and Google. I think kind of brought a lot of attention, but a lot of, well, last Friday it was CrowdStrike. I'm not going to share my screen with that one, but I haven't paid attention to it. Did you have any impact by that?
No. The only impact I had was my mom called and asked me what's going on.
I love it. Yeah. So CrowdStrike is a software company that develops security solutions, and it didn't work out real well last week. And so that stock was trading, and this is not a recommendation, it's just talking about volatility. So that stock was trading for about $365 a share. Today it's at $255. That's a haircut. That's a pretty substantial drop. And that disrupted the airfare or airflow of airplanes. It disrupted a lot of things. I was on vacation and I didn't have much technology going, so I didn't notice it. Friends that we were visiting with in Hilton Head got stuck a little bit in Charlotte. They finally got out, but I saw a meme that said Y2K, and that's kind of what can happen. I think it's that's where we live. We're at the mercy of these electrons flowing through the power cords that we will have disruptions, I think.
Keith, could we talk about election chaos? I know we're wrapping up soon, but can we go into overtime?
Well, we'll be mailing out a new anchor, and I talked a little bit about this. Have you ever heard of McKay's?
Nope.
My kids made me go to a McKay's. It's a retail store.
Oh, nice.
It is.
That's why I've never heard of it.
It is half price books on steroids.
Oh, books.
It's a warehouse, which I didn't even know books were a thing anymore. Like I thought Amazon killed that, but we stopped in Nashville at a McKay's, and this thing was just stacks and stacks of used books and humans everywhere. And there was no social distancing going on. It was just crazy. And I think it's a new idea that people are flocking to. And I'm like, surely I can find a book in this.
The Buc-ee's of bookstores.
Well, it's the used Buc-ee's of bookstores. So I'm gonna double check the name of the book I bought. For $4, I bought a Dale Carnegie book, How I Stopped Worrying
right there
and Start Living. Yeah, I've been reading it. I just thought it was a good book.
I love the title.
Yeah, it says How to Stop Worrying and Stop Living.
Start Living.
Yeah, and I bought it for $4, and I just thought, I think this book would sell today. I think there's so much anxiety, so much worry going on, and we are living in weird times. I feel like I'm back in my 1960s, 70s days with the weirdness that's
There's
going on.
There's a book out there called The Anxiety Generation.
Yeah. So tell me what you're thinking about the election.
Well, the reason why I bring it up is because when I'm talking with you all, you bring it up to me. And so just wanted to address it. Wow. I mean, in 8 days, we saw some pretty wild stuff. An assassination attempt, a president saying, hey, I'm not going to run for office. And so the question is, hey, what's going to happen with the stock market? And we have talked about presidential election cycles several times. I don't know if we just throw all that stuff out or not, because of all the craziness that's happening right now. But we're always tempted to think that this is the most important election, or this time is different. And I just want to encourage everybody. And the beauty of the stock market, the beauty of your money is it's flexible. It's like Keith was talking about earlier with our friend Brian. You can choose to be in the market one day. You can be out of it the next day. You are allowed to do that. You don't have to just stay in. You don't have to have it all in. There might be a time in your life where you are going through some worry. And it could be for very good reason. And if you're going through a time of life and some worry, maybe the best thing to do is just chill with the stock market for a little while and say, hey, Keith, I'm going through a time of worry. I would like to not have the stock market be one of those worries. Can we take a 3-month break, a 3-month sabbatical from the market? When I go on vacation, I try to just stay away from the stock market. Sometimes I'll pull a lot of my money even to cash. I'm not recommending you do that. It's not a recommendation. I just don't want to worry about it. But what I'm saying is the stock market, it really doesn't care who's in power. You'll see short-term effects, and one industry might be rewarded by an R, and another industry might be rewarded by a D. But really what it cares about are profits. And so the beauty of all this whole thing is it's you, it's me, it's the pioneer, it's the risk taker, it's the person looking to do something different, it's the individual efforts being made. That's what's going to champion the future. And so stay focused. The election stuff is going to be crazy. It already is crazy, but it's not going to be the pusher behind your money and your retirement.
Yeah, I was telling Doug earlier this week that when I reflect back, I've had probably 2 to 4 bouts of depression during my adult life. And the 2 big ones I realized were during presidential election years. And if you want to stop worrying and start living, I think part of going through a season like that is reflecting on what are the catalysts that led my thoughts to go down this rat hole. And so those are really healthy things. Like, but the early on, it was the media influences back in the 90s that were getting in my head, and so I turned some of those out. Like even today, I think journalism is kind of a joke today. That's just my opinion. I studied journalism while I was in high school and was involved with it, and none of the rules that they taught me are in place today. And when you go back to it's about the capitalist thing, is that there was just a polarization of journalism a couple of years ago, right? Like you had to be one side or the other, and nobody really knows what the truth is in a lot of situations. And so there's just a thing that's inflamed a lot of emotions in people. And then ironically, one of the things that jumped in the middle of that was a capitalist bought out Twitter, so there could be a more free-flowing exchange of information and ideas. And so that in and of itself was like, oh, that was really interesting. I didn't see that coming. And there's a lot of things you probably won't see coming, right? And one interview with Elon Musk is he risked his capital to buy that because he thought there wasn't really free communication in the media anymore, and so he put it out there. And so who knows what's going to happen in the next 6 or 12 months. I think it'll be interesting. I think you'll be able to tell your grandkids about 2024. I think that's what we'll have.
Yeah, this is a good time to be living. It's a good time to listen to your family and your friends too. Just not get all cranked up about this stuff. You can do it. You can do it. And so anyway, hey, thanks for Gimbal overtime. But if you need to talk with me and Keith, please call us. Please call Phil. Please call Amanda, Libby. I mean, just give us a call anytime. It's why you hire us. We're here to serve you.
And I just trust you have a great weekend, and we'll talk to you soon. You guys enjoy the day.